Alright, what's up guys? So I'm going to be finishing that video that I had from yesterday. I just got a little bit busy, so we'll just be going over the past couple days right now. I'm just going to quickly do this as I'm on my computer, and my laundry machine is being pretty loud right now. Alright, and my computer's hot for some reason. So as you can see, we swept this low, which was the 8:30 open, so there was news. It's been the CPI low that was swept, and as you can see, after the sweep, we're looking for a fair value gap on the 1 minute because I'm a 1 minute trader to be created as we close it, but there's no fair value gap, and you can see there's the rejection wick right there, so that does show willingness to not go lower. I see this reaction right here off of this fair value gap. Once you see that close, as you can see, this is a good trade on my strategy that is proven to win. But we close above, we do not take out the internal high of this leg, which is this high. What we do is we close above, we retrace back into it. Now let's see how mechanical we are. How crazy is this? We trace into the consequent encroachment of that one. We're all relying on the standard deviations of specific price trading ranges. So that would have been my low risk buy, because yes, it's going to fail more times than not, than compared to if you were to buy this inverse right here. But hypothetically, you do not want your stop this long. So if you enter here, you're able to keep your stop this short. So going into like any trade, because that wouldn't even be a trade that I took, since that's right at 9:30 open. Let's see if we go to the macro. I'm a big macro trader, so that 9:50 to 10 a.m. I'm looking for that reversal. So this is the time that I'd potentially be looking for a reversal, and you do see we do get it. So that is the trade that I would have taken. Yeah, this is like my trade. I like this one as in terms of like a higher probability, because we do get that rejection block, and you're able to wait for confirmation off of this one, because once we come through these highs right here, and we're just having a low resistance liquidity run in the basis of this trading range, which we do want to see resistance from hypothetically, it's a good trade to target. And then if you look, maybe there's some equal highs, but no, there's no equal highs, but still, that's a better trade that I would have taken, especially during the macro and the 10 a.m. reversal, which is really high probability. Then we do take out those higher highs. Let's switch to my seat real quick. There we go. So we take out these highs right here, as you can see. And then we also rip this high. So we create a high, and then we take it out. And as you can, when you come in and you see it, we see that once we take this high, we don't display heavily over it, but we come back into this inverse fair value gap, because at this point I'm looking, you see the high taken out, you're looking for not a continuation, because if you're looking to take that long, you would have taken that long down here. You would not still be entering that long while price is trading in a premium. So you're looking for shorts if you're looking to trade. And as you can see, once we take this high, and we quickly show a retracement back down. Yes, price is kind of sloppy here. Some people might have gotten stopped out here, but I still think that's a good trade to take, because a lot of the times it will work. But you do want to see, there will be liquidity engineered after we take highs. So we take out the high again, the engineered high, and these stop losses right here. And this was the inducement, and this was the stop hunt. And this is the turtle soup entry, and right here we get that inverse, we close below, and this is a good one because we don't take out this internal high. This tapping away in this consequent encroachment is what took out this high. This is the manipulation, so that you're able to project the standard deviation of this into the future, and you could be able to predict that you want to target one standard deviation of the manipulation leg before taking profits. And as you can see, that price trades into it and it rejects from it before coming to a new fair value gap. So your trade entry here, this isn't in the macro, so it could have been high probability. Would have looked to see ICT's Sun model is the first fair value gap after recent high or low has been swept, is your model entry. So it would have been around here. adjusting for slippage, let's say we just got it at the stop of the inverse fair value gap. Your stop would be here. 14 point stop loss. But the key here is you're not really risking that much, because what price is going to do, you get out once this is broken right here. You have like a 1 point stop loss. That's why getting your entry on point is really good, and that's what I kind of have been struggling with. But now I realize that it's okay to lose, but it's okay. You have to learn from it, and you have to be more patient, because when you're patient, you're able to get this entry right here. You want this entry. You don't want to be trying to take this entry. You're waiting for that inducement. You're waiting for those ICT traders. You're waiting for ICT to get stopped out, because you're better than them, and you know the market's better than them. And that's a really good trade, because as you can see, you predict 100-point move, you know? So, and there is like potential more entries. Like, let's say if we're going through, this is macro timing right here from 11:50 right here to like 12:10. So we see the consequent encroachment of this fair value gap be filled. We don't close above it, which is like what we want to see. We did close above the consequent encroachment, but that is to tap into this breaker block right here. And after that, we see that there, within this, there is an inverse fair value gap that is holding price. And you have to be a smart trader to realize these things and see these things as it's happening live. But you see that price is respecting it, and then you see this is the internal low. So remember, this trade is still valid until price takes out this. So if we close here, you're valid to take that, and price closes below. Remember, this is bullish. Once we close below here, technically this is the order block, but this is an order block as well. So as you're seeing this live time, you're noting this order block. We're looking for the consequent encroachment to be filled. It's filled. We see this fair value gap along here. This is like ICT's sun model again, because as you can see, price is fractal. So look, it does this again. This is the internal high that it made within the fair value gap. A good spot for liquidity, lots of positions entered. It induces the traders in, it stops them out again. We sweep that high again like we did earlier. Now that's the high that we don't want to see taken out, because it's a swing high, right? And then we create that first fair value gap, and we enter in off of there, and your short is here. So this is a good trade, because you're also seeing that rejection order block, not rejection, propulsion order block being made, and it's within a macro, and you already have a confirmed bias, because up here you're pretty much gambling. You're just gambling smart. I don't know if you're, it's hard to say gambling, but because when your risk management is fine, you're never really gambling. But this is more of a risk than a trade like this, because when you're taking the trade during the macro, you have more confluences, and you also have that reassurance that price has shown the willingness to go lower. And with a lot of movement and volatility, take out these lows. Low resistance or liquidity run, and you have to predict that. That was the first trade. I'm going to the pool to swim. I need to go soon. But alright, next one. Not trade. I never took any of these trades. These are all just backtesting ideas. And as you can see, there's good trades here. Like, we take out, I'm just like a price action maniac, but we take out this low and these lows right here. We don't create a fair value gap under it. This is kind of a tip I've learned. If you don't create a fair value gap under it, it doesn't show the willingness it won't go lower. We inverse this fair value gap before taking out the internal high inside of a fair value gap, which is right here. Remember, this is our liquidity spot we want to see taken out. We're still in a bearish trend, technically. Not trend, but a short-term, very, very, very short-term micro trend. We're bearish. But once we get that close above, that is one PD array being disrespected, and then we get that close above this down candle, which is another sign of price going higher. And this is an order block. So once it's a change in state of delivery. So once we get this change in state of delivery or order block, kind of same thing, we do enter our position there, and your stop loss would be a close back below this inverse fair value gap, but you would put your hard stop somewhere around here. Yeah, just imagine sometimes for anybody if somebody ever stumbles upon this and then they try to understand what I'm saying, it probably makes no fucking sense, dude. This is like really high level ICT knowledge. And some people say it's like fucking voodoo bullshit. But like, look at the preciseness of the just me backtesting this. Like when I look at these things, I see exactly what's happening. And when I'm doing a live time, you can see when you see these candles being formed and you see the accumulation, the manipulation, the distribution, you see these things come to life, you just truly believe it. And you see the concentrated crush be respect, or you see inverse fair value gaps before the start of every single big rejection or move into a different direction that happens after a sweep of liquidity. It's fucking turns me on, bro. It's insane. Oh fuck no. Okay. So this is going into the day. We took out this high. Wait, I might have like seen this, but this was the market maker sell model. You know, we have that prior accumulation right here. That manipulation. Remember, it's always about that inducement. We create this high. People don't think we're going to take this high. They take out the shorts. They get stopped out. These people eat. These people, the turtle traders, because what is it? It's like that slow. Yeah. I'm not really trying to look through it too much, but as you can tell, if you're waking up and you're seeing this, you know you're bullish, because we're showing a lot of displacement through these lows. Just kind of all of these lows. Yes, we don't show displacement when we accumulate here, but that's because we need to tap. We need more liquidity to move lower, so we tap back into the equilibrium of the trading range. And then, yeah, this is, I mean, a good short. Fuck. Oh my god, dude. Dude, what the fuck? There. Alright, so, dude, it's not letting me move the screen. Fuck. Shit my pants, dude. Alright, but, yeah, this is a high probability long mature here. I'm just gonna look from here, but yeah, we get that. You can tell that there's this fair value gap right here. Oh, I'm gonna kill myself. Bro. What is this fair value gap right here? That obviously gives some sign of being respected. It did move higher. Alright guys, I'm gonna go off, but I wanna create another video tomorrow. I've just fucked up my computer or something. Bro, I'm pressing the backspace button. Alright, yeah. So, oh shit. Then a circle workspace. Alright, I'm getting off, guys.